Hello everybody, Keenan here and welcome back to the Winnipeg Market Watch YouTube channel. Today I've got something really exciting to share with you guys because I've been diving deep into the world of AI and I thought, I have all this writing, I have all this data, let's train an AI and get it to predict pricing in the Winnipeg real estate market for the next few years and just see what it thinks. So I did just that. I took 20 years worth of real estate market data from the HPI line chart, along with all the articles that I've written on Substack, and I asked the AI to make a few predictions from some certain specific timeframes over the next few months to years, as well as one really long shot prediction for 10 years from now, and just see what it came out with. So in today's video, we're going to be looking at what those predictions are, why I think the AI made it, and what implications there might be for buyers or sellers in the Winnipeg area. So let's start with a little bit of context. For those of you who aren't familiar, the HPI line chart is a tool that's publicly available. What happens is the people that analyze pricing on MLS take the numbers that come from every sale of every house in every general metro area across Canada, they compile them into one uniform data set and then plot it on a line chart for everyone to see a new data point one time per month. Now, we look at this a lot on Substack, and I highly recommend you check out some of those articles for more information on what the HPI line chart actually means. But this is the information that was fed to the AI along with some of my own writing, which it has edited for me for the last 2 years. So what does this mean? It means that the AI is familiar with the seasonal trends of Winnipeg real estate. It means that the AI generally knows what's going on with the interest rate environment. And it means that the AI is familiar with Winnipeg as a city and the dynamics on a per area basis, as well as how the line chart has moved for a considerable period of time. So without further ado, let's take a look and see what the AI had to say about the city of Winnipeg.
2,000 years later.
So let's kick things off. The first time frame I asked the AI to predict is December 2024. The AI expects the benchmark price in December 2024 will be $414,000, which is actually a slight dip from where we're at today. The current HPI price for Winnipeg is actually $418,800. So the AI believes that this dip is going to line up with typical seasonal trends that we see in Winnipeg in the winter, where the market traditionally cools down a bit after the busy summer and fall months. I think this is an entirely reasonable guess. If you would have asked me, I probably would have said that dip could probably go a little bit further, but the AI is familiar with rates being cut and understands what impact that could have on the market. And based on what it saw for the last 20 years of pricing data, it's probably smart enough to think that the rate increases might outweigh any potential seasonality that would likely come at this time of year. So very cool prediction to know that we're likely to hold significantly higher at the end of this year than even last year. Now, next time frame, I asked the AI to predict the price for May 2025. The AI predicted that in May 2025, the city of Winnipeg will surpass the all-time high and hit a benchmark price of $432,000. Now, this aligns with the sentiment that Winnipeg generally has its strongest market month between either April and June. This particular AI, having seen all of the data, suggests that every year we tend to see a large spike in prices in the spring as buyers flood the market. My prediction of $432,000 suggests that we might break past the all-time high of $429,800, setting a new record for Winnipeg real estate sale price. So fair enough. It's familiar with the all-time high from 2022. It thinks that with rates and demand that we're likely to actually surpass that, which, as you guys know, that is also my prediction. I think, in fact, we might even go a little bit further than what the AI is suggesting here. So for December 2025, the AI expects a slight pullback down to $426,000. And once again, the AI is predicting just seasonality, which is smart of it, resulting in a dip from its $432,000 peak down to $426,000. Now, even with this dip, the AI indicates that its projections indicate that demand will remain strong, holding prices steady, and prices shall remain close to the spring high as long as rates and pent-up demand remain strong. Okay, well, very good to know. I think that's probably a little bit ambitious. I do believe that it could possibly go lower than that, but again, this is the one that has the computer for a brain. It's not just a stupid human. So next time frame, May 2026. The AI projected a very large jump in the all-time high price. It projected $445,000, not next spring, but the spring after. And its reasoning here is identical. It says that the upward trend with each spring is going to push the market higher and higher, and that by May 2026, the combination of pent-up demand, seasonal growth, and long-term investment opportunity, plus low rates, are going to push that benchmark price all the way up to $445,000. Now, folks, if you're an owner or a buyer, that sounds great because that's significantly higher than what we've seen now. It's almost 10% up in about 2 years. I think it's entirely possible that this could be accurate, obviously with the caveat that if there is a global economic catastrophe, we can't guarantee anything. But noting past trends, this does seem like it's an entirely reasonable and realistic possibility if you ask me. So, the last time frame that I asked the AI to analyze was December 2026. And for that time frame, the AI actually predicted the smallest downturn of any year by percent so far, where it thought that by December 2026, the benchmark price would be $440,000. Now, it states again the exact same thing, that this takes into account another seasonal dip after a spring market, but it also predicts that we'll end up much higher than where we started. The AI did not go into detail about whether it thinks that's rate driven or situational, but that would be probably one of the smallest dips from spring to winter that we would see maybe ever, if that would be true. And I should probably be asking it why it thinks it would be such a small dip compared to previous years. That's about 1.25% from where it says the high is, which is probably not seasonally normal, but keep in mind, it does know a lot about the current situation just from the training that it's had, and it might be right. There's only one way to find out. We'll check back in about 2 years. So, last thing, just for fun, I asked the AI to make a prediction for 10 years out. I said, predict the Winnipeg benchmark price for May of 2034. And you might be wondering, what the heck is this gonna guess? Like, that is such a faraway prediction, and I know, it's just for fun. The AI predicts that in about 10 years from now, May 2034, the Winnipeg benchmark price is going to be as high as $685,000. Now, this is probably because the AI assumes the Winnipeg market is going to continue to grow at the moderate rate that it's seen over the years. And based on the historic trends, the AI says that Winnipeg has shown steady appreciation in property value over the years with very few and very limited pullback. Okay, great. It also says, additionally, inflation plays a huge role here. Over the next decade, the AI expects inflation to gradually push the cost of goods and services higher, and real estate prices typically rise alongside inflation. As the Winnipeg population keeps growing and demand remains strong, the AI believes that prices will continue to appreciate even if there are some short-term fluctuations. So, that's a really cool thing to note, because that implies that the benchmark price, according to this AI, is likely to grow about 50% from the current date to May of 2034. So for home buyers or investors, if you've got a long-term perspective and 50% is just a guess based on seasonal trends and 20 years of data, that is a pretty lucrative opportunity to put some money in either an owner-occupied house or a rental property, because 50% gains over 10 years is actually a pretty competitive rate. I think that's even going to rival the S&P 500 on a historical average. So very, very good stuff. Now, I can't end this video without some assumptions and talking about risk. So a lot of the assumptions that were built into this video are all based on past performance and based on things that I myself have written. So this AI, first of all, is very biased based on what it already knows. It did not account for recessions, significant changes in interest rates, or drastic policy changes that could impact housing affordability. And of course, past performance does not guarantee future results. So it is also worth noting that because Winnipeg does follow a seasonal pattern, with peaks typically occurring in the spring and cooling periods typically occurring in the winter, the seasonality that the AI has predicted is why there is some up and down, and the nature of how far up and how far down could also probably cause some variation, especially as you go further out. The AI stated that it believes the Winnipeg real estate market, generally speaking, will return about 4 to 5% annually, which it says aligns with historic real estate appreciation in other similar stable markets. So it's important to remember too that while Winnipeg is a very stable market, the fluctuation absolutely can exist, and any given year that could range between very small fluctuation and very large fluctuation. So these numbers are just a guess, and don't make financial decisions based on that. So wrapping things up, there you have it. AI looked into the future and saw what it thinks of Winnipeg real estate. I think it's super interesting to see how the AI predicts growth is going to happen at certain trends, and it's always important to remember that these numbers are just a guess and not set in stone. Markets are unpredictable, but when I see other people or AIs predict really large possible gains into the future, it first of all gets me excited about real estate, but it also has me thinking about my role in real estate a little bit differently, because I do believe that higher prices are to come in the future, the extent of which I'm not quite sure, but it would be pretty wise to assume that even if the city of Winnipeg performs half as well as this AI is suggesting, that things are likely to end up going pretty well for those who hold real estate in the future. Did you find this information as fascinating as I did? Don't forget to hit the like button, remember to subscribe, and click the little bell icon for notifications so you don't miss any future videos. And for sure, leave a comment. Let me know what you think. Are we due for a correction, or do you think the Winnipeg real estate market is going to perform the way the AI thinks? Let me know. I'd love to hear your thoughts. Thanks for watching. Looking forward to seeing you guys in the next one. Peace out.